This year, the Cooperative Bank is making youth empowerment a priority. We are here to help Kenyan youth, whether in college, employment, business, or agriculture, realize your dreams by providing the tools and knowledge you need to grow your incomes. This will be done through youth forums, a series of free weekly online webinars on Zoom and other social media platforms. Do you want to know how to turn your money into more money? Keep watching us this week as we are pleased to have Samuel Ngigi, Head of Business Development, Corp Trust Investments, return to the forum to talk about that. Welcome.
Good morning, everyone. Thank you very much, Sandra, for that wonderful introduction. Na karibuni sana. Again, I'm very delighted to be here for the second time, this being our fourth session. I am very humbled to join you and to interact with you again. Please let us know where you're watching us from. Don't feel free to share the link with your friends and the family to join our meeting today, or even for them to watch later. Thank you very much. Today, tutaangalia one of the main topics. Previously, we have had 3 sessions, and I just wanted to fanya recap kidogo because the three sessions were very key for what we are going to discuss today. The first one tuli mention kuhusu planning, and we discussed vile mtu yujipanga unajirealign, and we set out to make some few goals. We did learn about saving. Remember, the keystone on investing and to make more money always begins with saving. Tukasema ni wapi tunaweza weka pesa na vile mtu anaweza weka pesa, and then we learned a bit about shares. Now this is how you buy shares, how you identify them, and this was last week episode. So this week episode, we wanted to know how we can grow our money, how we can make a bit more. Na nilikuwa nataka to focus na one of ways of investing made easy. And one of these ways that investing is made easy is through something called unit trust. Najua sometimes tumesikia kuhusu hii kitu na tunajiuliza unit trust ni nini, or we might know about them but probably not understand them very well. So nitakupatia tu ka snapshot ka unit trust ni nini. And one of the few things you need to understand is that unit trust inakuanga an umbrella body. So unit trust first is set up as a legal entity. Vile tunasemanga, mimi I'm legal and I'm what is called a natural person. So a unit trust is what we call a legal person. So it exists, it's recognized by law. The main reason ni kwa sababu ni yenyewe inashikilianga pesa yako. The second thing you need to understand about it is that it's regulated. Na huyo regulator anaitwa Capital Markets Authority. Tukona regulators wengi kwa market. This is one who regulates the financial sector. So he's responsible for regulating the unit trust. Na kuna regulation very specific na zinaitangwa the CIS regulations za 2023. Hatutaguzia hizo leo kwa sababu ziko na very many provisions. Hopefully tukiendelea tutaweza kuziguzia ndio ujue rights zako na vile zina operate ama vile zina enforcewa. Now, another thing you need to know about unit trust na venye tunasikianga ni kwamba it's a lot of people coming together to pool their funds. Okay? So it is you and me and the other person. So you can be in a unit trust and the same unit trust bado mkona familia yako hapo. Your wife could be there, your husband, you could have a joint account. It simplifies investing and it saves you from a bit of the hassle when it comes to investment. Na ndio tuingie kwa hii topic ya leo vizuri. Nataka tujiulize maswali tukiendelea. Ama ka reflection. You know, as I was sitting somewhere yesterday, I discovered nakulanga githeri yangu na avocado. And that point na tumia a fruit. Na nilikuwa nataka kujiuliza, do you ever find yourself making a preference against buying one fruit or buying like a fruit salad? So kuna ile day utaenda uchukue mangoes ama unapenda mangoes, Kuna mwingine atataka mangosi zake na popo na imewekwa melon kidogo, kitu kama hiyo. So nataka pale kwa comment section tuanzie. Tell us, what is your preference? Would you want to go for, just eat passion fruit peke yake, ama unataka ile passion fruit imechanganyishwa na tumatunda twingine kama maembe, kapopo kamewekwa hapo? Na nitawaelezea kwa nini nauliza hii swali. Now, unit trust inakuanga an umbrella body. And when it's an umbrella body, kuna zile tunaitanga funds ndani yake. The main reason this happens is because each fund carries a different type of investment approach. And by a different type of investment approach, kuna mwenye atataka pesa yake iwekwe, anataka akiweka ile 1000 ibaki ikiwa ile 1000. Haraka yake ni pesa yake iseviwe, lakini yan kidogo ndio at least beat inflation. Na kuna mwingine atataka iwekwe kwa blender. Unajua, unataka kuona what can I really make out of this 1 shilling that I put in that basket. So it goes, he can take a bit of a higher risk. Okay, and they are shaped this way to be able for you to decide. So there are essentially 5 types of funds in a unit trust. Kuna zile tunaitanga money market funds, hizi tuliongelea episode 2. Kuna zile zinaitangwa fixed income funds, so hizi tutaziongelelea, nitakuelezea ni gani. Kuna balance fund, equity fund na special fund. So nitaanzia na money market just to recap. So hizi ni zile funds una invest predominantly sana for kitu tunaitaka capital preservation. So unataka ile pesa yako ikuanie interest, lakini usikue na shaka that pesa yako ita devaluate. So ukiweka ile 1000 shillings yako utaipata ikiwa 1000, so ita earn interest. So sana hizi ndizo zenyewe tunasemanga ni low risk, kwa sababu they are not very aggressive in what they invest and kwenye zina invest. Kitu ingine utanote ni that money market funds are regulated to what and where they can invest in. So zinapatiangwa limit ya zile vitu zinaweza invest. So obviously money market fund haiwezi enda kununua shares. Na zinakuanga poa sana. Na venye tulisema episode 2, they are very good for accumulating capital. And this is essential tukimove kuelezea hizi funds zingine. Some of their common characteristic is that they offer interest on a monthly basis, meaning that kale ka statement kako kakikuja kana tumango ya kila mwezi utaona interest yako yenye umean, na zina compound your interest on a monthly basis. Na requirement ya kujoin money market ni easy. Currently for Co-bank you can join as easy as 3 taps. You can open a money market account in your app, whether it's Co-app ama Air app. So currently returns kwa market zina vary somewhere between 7 and 10%. So very good, above inflation. Na zina invest predominantly in deposit, treasury bills na bonds. So treasury bill na bonds ni the papers that government issue. They could be T-bills ni less than 1 year, bond inakuanga for more than 1 year. So hopefully hiyo tumeelewa. To move kwa ile ingine ya pili. Sasa tumeanza kwenda juu in terms of kitu tunaitanga risk. Na kitu tunaitanga risk ni hivi, hata regulator anasemanga that there is no investment which has zero risk. So all investments are considered to have some element of risk. Now fixed income will invest in a bit longer term approach. Okay, as compared to money market where tunajaribu kubeat inflation, they try to get you a higher income over a period. So risk yake tunaitanga low to moderate. Okay, so and they are very good for those people looking for income growth. So kama uko na ile pesa na unatafuta ile passive income, you know, I have accumulated my money, or my goal is to accumulate my money na nikuange na a passive income from my savings, then fixed income comes a very good way. So they have sometimes a bit higher level requirements in terms of entry, na nikisema higher level tunaangalianga entry point. So compared to money market zenye zinaanza as low as 100 shillings, you find that fixed income might start somewhere between 5,000, 10,000, 100, depending on the person who is offering them. So their current rate of returns vary between somewhere between 8 to 12% per annum. In terms of how they report, it is dependent on each fund. There are some who will report to you on a monthly basis. There are some who will do it on a half-year basis. So it is very good for you to understand the fund that you're going to invest in, how they report. The good thing is, huyu regulator wetu mwenye tumesema anaitwa CMA has regulation that require each provider ama yule mtu mwenye anakuprovidea unit trust aeke document inaitangwa fund fact sheet. So it's a monthly document that shows the fund and how they have performed. Kutoka hapo tunaenda another fund which we say is moderate to high risk na inaitwa balance. Yani ina balance kitu. Na ina balance nini? The first two funds predominantly will invest na kitu yoyote inapatiana interest. So ndio maana tunaita fixed income. Because interest is predetermined. So kama ulikuwa na fixed deposit, tunajua that hii fixed deposit inatupatia 10%. So that's a fixed income. But when we come to balanced, tunasema tunataka increase exposure yetu. Why? Because when you get a fixed income, you predetermine what you get. So if you are getting 12%, you cannot increase it to 15 because the asset that you hold is already at 12. But when you introduce another level of shares, then you get to stand a chance to participate na kitu tunaitanga capital growth. And as we learned last week, capital growth comes from, it will come from the dividend you're getting. It will also come from appreciation of the share price. So where you buy a share at a lower price, you invest, and then you get that income. So very good for capital growth. If I can use an example, or if I can try and explain, a fund like the National Social Security Fund uses a balanced fund approach where they have the assets from fixed income to shares, and they help this fund grow. Remember, easy savings are pensions zinakuanga long term. So most of the funds you find that they are balanced. But that is just an example so that we can understand what kind of investment we are looking at. They also require a bit of higher level requirements in that maybe depending na ile fund zinaweza taka ukuwe na minimum entry level funds. They might lock you in for a certain period. This being a longer term fund, wanaweza kupatia the requirements from them. So whether it's that you invest for a minimum of 1 year, 2 years, or 3 years, so the requirements are a bit steeper compared to the money markets where it's predominantly for saving, compared to balance where it's inclined ya ile kuinvest. So hii ina invest in several places, fixed income, shares, inaweza kuwa na exposure in 1 or 2 other asset classes, but predominantly will be in fixed income and shares. Then we go to the fourth fund. Now we have approached to what we call high risk funds. And by high risk, ni kwa sababu ya kitu watu wa economics wanaitanga volatility. Na volatility is the ability for a fund to gain in a very short time and also probably lose points in a short time. So it's one of the high risk funds. By law, it's required to invest over 60% of whatever it's holding in shares. So equity. So equities kwa NSE, equities regional, so it must invest over 60%. It is very good for long term and usually very recommended for young people. Why? Because they have the advantage of time. And when you have the advantage of time, 10 years passes by very fast without you even knowing. And where you are 10 years ago may not be the same where you are in the next 10 years. They may also have a bit of higher entry level requirements, might require somebody to come in with a bit of a lump sum, lock you in for a period, or depending on each fund. Again, they are very unique to each fund, and predominantly will invest in shares. So it will have a bit of up and downs, but for the last 3 years, this has been one of the best performing funds in the market, performing somewhere between 25 to 40% in terms of the returns. And then we have what we call special funds. So special funds are funds which are unique to themselves, mainly because the provider ama regulator anaitikisha the person who is running the special fund to come up with an investment strategy. And the investment strategy is the one which will address how your money is invested and the return you're looking at. So they are predominantly very high risk, and they have a very unique asset mix. And they can have an asset mix from equities and what we call alternative assets. And this is something which is very exciting. It's one of the main frontiers in terms of investment. They are very good as a long-term investment, although their entry requirements may also be a bit steep. You may have even special funds which may have minimum entries in the 6-digit part. However, for young guys, the element of time is always key. It is the advantage that you carry. So the main key investments they carry right now is invest in alternative investments. We are talking about what we call derivatives or ETFs, exchange traded funds. So very unique. They actually report every month. So kutumia your document tunaita fund fact sheet, you can actually be able to see where they invest, they disclose, and they will tell you even the holdings. So now, unakumbuka tukiongea kuhusu matunda. Okay? Now this is where it all boils down. As you can see, we have a buffet. And it's a buffet of where you can be able to invest. Thank you very much. I can see feedback from you. Asanteni sana for the interaction. I can see guys have joined in from several places. We have Thika. We have other guys who are joining us on all the platforms. Remember, we are on Facebook, on X, and on YouTube. Kindly request your friends to join your family. Send a link. They can watch this session later. We have even guys who are tuned in from Dubai. Thank you very much for joining us. I hope everything is okay where you are. Asanteni. Let's interact. Ask questions. Tuko na question and answer, but I'll also be taking more questions from guys as we proceed. Thank you very much. Kenya 254 hapo Kayore. Nashukuru sana. Haya. Now, tumeongea kuhusu hizo funds na zile returns. So, swali ni, if you had 2,000 shillings today, ile umesema una save ngiri mbili per month, ebu niambieni hapo kwa comment section, hiyo pesa unaweza iweka kwa fund gani? And then, uniambie, ungeweza kakuwa na ngiriso. Tuseme, ngiriso inaweza kuwa imetoka place mingi, but assume imetoka place kama HELB. So pesa ya HELB imeingia pale, kabla semester ianze, uko na hiyo 100,000. Unaweza iweka wapi? Na tutadiscuss tuone na tushare. Unaona, kuna mtu maybe amefanya hivyo, or how can we be able to invest and save. Thank you. So money in my pocket. So tumesema tutengeneze pesa. What does money in my pocket mean? Na hii ndio swali ya venye tunataka kujua how hizi investment tunaita unit trust vile zinaweza tusaidia. Na nataka kukupatiana story. Na nataka kutumia graph tukichapa hii story. So if you were to save once, tuseme hii ngiriso tumeona hapa. You save it once. Na uiache. And hii graph nimetengeneza na assumption that una earn kitu 9% return ya between money market na fixed income. So expectation inakuanga saa zingine ati hii do itapanda juu kama gorofa ya Isili, lakini probably hiyo si true, kwa sababu growth inakuanga kitu gradual. Na hii nikiwa shule tuliambiangwa ni kitu inaitwa linear progression. Sijui wenye tunafanya mathematics kidogo venye inamaanisha it starts off, seems a bit slow but ina gain momentum. Sawa. So kusave once itakupatia benefit. So kwa hii graph on the right side ni time. So you will continue earning the more you are patient. Na hiyo you work vizuri sana, na ndio tulikuwa tunasema kwa episode 2, ukiwatch episode 2. Vituka emergency funds, with time emergency fund you increase, na ukiweka pahali na earn interest ita increase. Haya, alafu tukafanya simulation nyingine. Yule tu msee alichukua ile do akaeka tu once. But kulikuwa na msee wa pili akasema nitaeka hii do but nitakuwa naiongeza na 10%. Sawa. So over time the difference between huyu mjamaa anaongeza 10%. So tuna assume uko na 1,000, so wewe uliweka 1,000 ukaiacha, msee mwingine akasema nitakuwa naongeza so moja. So kila mwaka tu assume ni mwaka utakuwa na 1,000 plus interest, yule atakuwa na 1,000 plus so moja plus interest. You can actually see the gap. It will more than double. So this is the beautiful thing we call compounding. Okay? Now this need to assume that to make a place pesa in an interest. These graphs are very, very different when you are looking at long term and you are looking at investments in the balanced, the equity funds and the special funds. Kwa sababu, remember for them, their growth is not consistent. It is driven by strategy. So you can find probably hata graph yake haiwezi toshea hapa. Okay? So money in my pocket. Remember, money in your pocket is only as good as how much you put. And if I can bring that into numbers, assuming 10,000 shillings or assuming a return of 10%, a return of 10% doubles itself on a simple line. Kitu tunaitanga simple ni ile unapata tu interest, na hiyo interest hai compound within 10 years. But if you compound the 10%, you will double within 7.5. And it will double even more if you have additional investments. I don't know whether that makes sense to anybody. Okay? So those are the mathematics. Then I went ahead na tuka compare kitu ingine. So yule mjamaa ako kwa hii line ya green, kuna mtu mwingine. But this other person, Kenya alifanya, ni ilifika point akasema nataka ku-access pesa kidogo. So ile break ya kwanza akachukua pesa kiasi. So what happens to investment is, ukiamua kuinvest then uiguze kidogo, graph inaenda chini. Haya, the good thing is they are also saving the 10%, the same way to the green person. Na nataka tuangalie hiyo difference ya approach ya hao watu wawili. So huyo mtu, yes, alitoa but akaendelea kuweka, and then at some point akatoa tena. So meaning yule mtu mwenye aliweka pesa na akaacha ilikuwa bado anamfikia. But akasema nitarudisha hizi pesa at some point. And kuna pahali graph inapanda steeply. Hapo ni penye alirudisha capital. But as you can see, ideally hataweza kufikia the person in green. Because when it comes to creating wealth, we understand the interruptions. But if you are disciplined enough not to interrupt the investment, the gap in what we call wealth creation and the gap in Kenya tunaita money in your pocket inawiden. Okay? And I hope this presentation will give you a hint of why the consistency and discipline in savings will be good for a long period. Now, this is the most interesting part. This graph was drawn for a period of 15 years. Now, 15 years for somebody who is 25, atakuwa how old? My guess is good as you, atakuwa 40 years. 40 tunasema is a new 35. So you are still a youth. Anyway, thank you. I didn't want to take long in today's session. Allow me to do the question and answer. I can see a lot of comments coming in. Thank you. We are very gracious. I'll take the first question from Zoom. Somebody posted, haukutuachia jina. Akasema, what is the difference in investing in equity funds? What is the difference between investing in equity fund as opposed to buying shares direct? So the main difference with direct investment versus equity fund is, number one, the person who is managing the fund is licensed and gives you the professional investment. So they normally will come up with an investment strategy. So they just don't blindly buy shares, rather they will do research on why they buy shares. And they come up with what we call a composite view or their approach. If we have, let's say, for argument purposes, over 80 listed shares, they will say, no, we'll limit ourselves to investing in these 15 shares where we think the value will be good. So number one, there is professional management. Number two, there is the diversification. Remember, an equity fund has pooled money, and it will allocate depending on a strategy. They will say, like, probably banking will do 20% in banking, and then they will allocate to different banks, different allocations. They say we see value in bank A as compared to bank B, and then at some point they will offload bank A and say now the value is in bank B. So there is the constant monitoring and management of your funds. In terms of exit, unit trusts are much easier to exit. That is in terms of liquidity. Saa zingine, when it comes to selling shares, it depends on the availability of buyers within the market. Now, for the equity funds, they have constant people who are buying in and getting out. So the liquidity is much easier. You might get your funds much faster. So I think that is predominantly. And number four, the other thing would be reporting. Remember, unit trust na equity fund, they will always give you a monthly report. Saa zingine ukinunua direct ni wewe unajitengenezea report. We might not be very accurate or the best at preparing these reports. So that's also another advantage. Thank you very much. Hopefully it has been clear. You can also let us know if that answer helped. We have some from Facebook. Thank you, Sam, for joining us. Karibu sana, please like and follow our page. Tutashukuru sana. Can you say about something about stocks and shares? So yes, so thank you, Sam. Last week we did cover that lesson. Lakini I'll just say that there are different types of shares. There is what we call listed shares or what we call quoted, na kuna zingine unquoted. And then shares, kuna unaendelea bado, you can categorize them in terms of the industry. Okay, so there are different types, but shares essentially, predominantly, how shares work, ni you become part of an owner of the company, and what you get is, as the value of the company grows, your share grows. So by getting dividend or by getting revaluation of your share. So where the company has very good dividends or where there is a lot of market activity and the share grows, your wealth also grows as being part of owner of the company. So thank you very much. Bwana Derek Kenoti, karibu sana. Naona uli comment ukasema MMF and 100K for bonds. very good. I think money market would come in great for huyo mtu ana save 2000 kwa sababu entry level ni low, and then gives you an opportunity kujipanga and take the next strategic step, maybe to invest in one of the unit trusts. In terms of bond, also very good because the minimum entry point ya bonds ni 50,000. That is kama una trade directly with CBK, but you can also buy into the fixed income funds which have a lot of bonds in them. So they allow you just the element of diversification. So when you buy direct, you buy it in an issue. When you buy into a fund, you are buying into a fund with a lot of these bonds in them. Kuna Wen Mutahi, Wen, thank you very much kwa comment yako. Anasema 2K kwa MMF na 100,000 ukasema tunaweza eka nini. Francis Masaku, 2K invest in special fund. Masaku, thank you very much. Hii ni research tunafaa kufanya. The good thing is the information is available. We need to research on the ability of ile threshold ya pesa tuko nayo kama inaweza invest kwa hiyo fund. So with time probably we'll get special funds which will be able to do the micro investments of around 2,000 shillings, but that is also a very good approach given that probably your main aim is to save the 2,000 for a long time. Thank you very much. Bado tutaendelea kusoma comments zenyu. Kuna comment pale na swali YouTube from Diana. Thank you Diana for joining us. So what are ETFs and how can I get to get more information about them? So ETF ni kitu tunaitanga kama exchange traded funds. It's an instrument, rather it's an instrument which is used by especially collective investment schemes or asset managers to trade. NSE or Nairobi Stock Exchange have a website which contains information on ETFs and how they trade. It's quite extensive in terms of getting the knowledge, but it's very helpful. One of the key main approaches tunasemanga kwa hizi episode tunafanya is give a man a fish and you feed them for a day, but teach a man to fish and you feed them for a lifetime. So the platform is very good for us to learn, but our main aim ni tusome tukigainingi practical skills. So Diana, I may not get deep into ETFs right now, but it's something we can arrange to discuss about given how they are structured and the asset class in itself. So I will note down that comment, probably have a session and explain what ETFs are, but for more information you can probably visit the NSE website and find the information there as we plan to come live with the information on ETFs. So we have another comment from Zoom from Timo. Timo says the special fund sounded interesting. Could you give some examples of special fund? So thank you very much, Timo. Timo, so we do have several investment funds. One of the key ways you can get to know what is there in the market is the regulation require the providers to publish them on a daily basis. So in the national dailies, let's assume it's the Business Daily or the Daily Nation or the Standard, we have a page on financials where they list the unit trusts which are there and they categorize them in terms of the 5 type of funds that they are. They are money markets. So we might give an example, probably there is NCBA and others. So I would encourage you, or I would want you to visit or get a newspaper, get today's newspaper, look at the financials page. There are several. You will be able to see what they are offering or the returns which they are declaring. When you see one, please visit the website. You can look for what we call the fund fact sheet or the investor's note and get to learn more about the fund, how it operates. You can also, they will also disclose the past returns so that you can be able to see the historical returns. So thank you very much for your comment. Tunashukuru sana. Glenn, in Zoom, karibu sana, and thank you for being with us in this session. As a university student, what is the first thing we can invest in? That is low risk, to help in understanding the market before we start taking risk. So Glenn, normally pahali pa kwanza kuanza inakuanga money market kwa sababu it forms the basis. And when you're in money market, you will get the exposure for all the others. So you take the first step in the money market, hata ina build confidence. Ina build confidence, it builds discipline, and it builds the capital. Now, when after that, now we can move on. So we can move on to fixed income. So normally we do what we call a risk assessment. So this is where we ask you several questions so that we can determine what we call your risk appetite. Remember, kwa kila fund tulikuwa tunasema it has a risk. So you take the question and there is a scoring. So we'll do the questions with you, we'll score you, and then we will discuss your scoring. And with that, we'll say, your score is this, it is recommended to be here. But you know, sometimes the score may be affected by lack of information. But with good information, we can always do a reassessment. Thank you very much, Glenn. I hope we were helpful in response to your question. Thank you. Another question and comment from Dennis Wambogo. Highlight some few key points about treasury bonds and some differing points with money market fund. Thank you very much. So, Mr. Wambogo, money market fund is a pool that has a lot of assets ama holdings, tunazitanga holdings. Ni kama pot ya githeri, and si pot tu ya githeri, pot ya githeri ya Kikuyu ama mimi. Itakuwa na mahindi, itakuwa na maharago, itakuwa na waru, itakuwa na cabbage, na tunaongezanga minji when we have very good moods ama tuko na wageni. Now, bonds is a particular holding, meaning that if you have a bond, you have a particular issue, ama you have that paper issued at a particular date. As compared to a money market where it may have several issues of bonds, and it will also mix with deposits and also call deposits. Now, for a bond, its main characteristic will be it's above 1 year. It can be up to 35 years in terms of how long ama tenure ya hiyo. Money market ita behave normally kama kitu tunaita call deposit, kwa sababu unaweza weka pesa leo wakuambie minimum ni 7 days, utoe hiyo pesa next week na itakuwa tu sawa. So they behave different. Ile coupon ya bond itakuwa fixed. Well, interest rate ya money market, it will be variable. Why is it variable? Because we keep adding money and removing money. And when you add money, you invest in the current interest rate. So when interest rates goes up, the rate for money market goes up. However, if interest rate goes up and you're holding a bond, the rate of income for that bond does not change. Okay, so that is some of the key differences between money market and bonds. I hope that was a bit clear. If not, you can always add a comment so that we can clarify. Thank you. We have another comment from Felix in Zoom. Karibu sana, Felix, and thank you for being with us. We hope to see you more often in our comment section and interact. So Felix says, I'm looking for an avenue where I can be investing without withdrawing for a specific duration of time. Do you have it? Does your money market allow for that? So Felix, yes. So our money market will allow for that to the extent that you tell us to do it. So if you make a resolution and resolute that we should hold your money without offering it back to you, we will be able to lock it in, but you will still retain control of the funds. So we are here to assist you in your saving and investment goals. So you can reach out to us. We'll be able to explain to you how we can be able to do this. Basically, we are very flexible as to how we treat our client requests. Thank you, Felix. We still have more questions, and I think this is the best part, because with questions, there is more interactions. We have a comment and a questions from YouTube. Thank you very much. How can I access the fixed income income on my account, please, or Co-op account app? Thank you very much. That's a very nice question. So if you do have the Air app or the Co-op Bank app, and you log in, on the right bottom corner, there is a new tab. Hopefully your app has been updated, and in that tab there is a place written invest. So if you click on invest, it will give you the option of investing, whether it is investing in the money market or the fixed income. So you can be able to go there, create account. It's absolutely free. It will not take you more than 5 seconds to create the account, and you can be able to save immediately. So thank you very much. We appreciate. Please let us know if it works on the comment section. We have another comment from Zoom from Mr. Nyaga. So Mr. Nyaga says, for someone who is impaired economically, or what we call irregular income, watu wa biashara, and desires to invest in securities, when I have a steady flow of income, is it prudent to wait, or can I start now? So Mr. Nyaga, this boils down to lesson number 1 on planning and lesson number 2 on saving. So it's always the right time to invest. It's always the right time to plan. One of the key areas that we do assist you with is sitting down and coming up with a master plan. When do you intend to invest? Do you accumulate? And one of the greatest ways of wealth accumulation is making it regular. So the income may not be regular, but you can make it. When it's available, you are allocating part of it to a certain investment. So let's say you go and score it a bit big. So at this point today, you went and got an income of 50,000, and you say that I'll allocate 10,000 to go towards my investment, and I'll buy the shares and wait. Because shares are long term, that is a very good event. So again, this becomes a part of you. It becomes discipline and part of your approach to investing and creating wealth. So it does not matter whether the income is regular or irregular. So thank you very much. I hope we have been helpful, Mr. Nyaga. So you can start now. You can start by downloading the Co-op Bank app. If you don't have one, and opening that money market or fixed income account, you can always withdraw anytime from the money market to purchase the equities or shares. So we have another comment from Zoom from Bwana Samson. Thank you, Bwana Samson, for joining this session and being with us and commenting. So Bwana Samson says, I'm certain of saving 4K monthly. Wow, that's very wonderful, Bwana Samson. Good, keep it up. Hopefully you do that for the next 15 years and that green graph will apply. What is the best advice for me? So Bwana Samson, one of the key elements is this 4,000 becomes the core capital of what you do or how you proceed. So in 10 months, you can actually see you probably will have met the threshold of several fixed income funds. In 20 months, you will have met thresholds for special funds. So the approach on what you do is the consistency. So target to remain consistent, then target to always take your risk a bit higher at every turn. Did you get to the threshold of a fixed income? Yes. Place the money on fixed income. Did you get to the threshold of a special fund? Yes. Place some money. So have some money in the short term, ama the savings, kama emergency money market. Have some money that you know that it's giving you a reliable, predictable income, fixed income. always have some capital that are geared towards the special funds because they are predominantly for growth of wealth. So hopefully this has helped you. Reach out to us, tell us if it has been helpful. You can always again visit us for a more in-depth conversation when it comes to investing. We have another comment from Bwana Anthony. Anthony, thank you very much for interacting with us. And Bwana Anthony is on the Zoom platform. He says, what advice would you give for somebody who is earning 20 to 30,000 per month and they'd like to invest? Do I save first or do I directly invest kwa vitu kama ETFs? So, Bwana Anthony, good question. Finance is very personal. I find it to be like wearing a shoe. So each of us wears that shoe differently. Each of us, the fit is a bit different. We have preferences that might not be the same to another person. So my advice would be based on a few questions to you. Where do you see yourself in 5 years? Where do you see yourself in 10 years? How much or what part of the income is disposable? How well have you budgeted? Do you have fallback plans? So again, all these factors come into play when you're looking at the investment advice. But my go-to response would be always have the savings before you invest, because without the saving, the investment becomes a problem. And one of the key issues is that savings sometimes may have very little threshold requirement. Investments may give you thresholds such that you find the one which you ideally think would be best for you requires for you to have saved for a while. So usikufe roho, and that is where we say that when you plan, you will succeed. Thank you very much, Bwana Anthony. We appreciate. We'll be reaching out to you just to see if also our response was okay. We are ready to have a conversation with you on a personal level just to assist with the planning, the financial planning bit. Thank you. We do have a comment from YouTube from Ms. Wanjiro. Thank you, Ms. Wanjiro, for joining us through YouTube. Please like and subscribe, share the link with your friends and family to join and probably watch later. He says, how much for the entry fixed income? So normally they vary. The fixed income for Co-op Bank has an entry point of 50,000 shillings. So with 50,000 shillings, you can be able to join the Co-op fixed income fund, and we will be glad to have you as one of our customers and clients, and we can walk through this journey together. Thank you, Ms. Wanjiro, for your question. We appreciate it. We do have more questions. So allow me to take another one from Anthony. Anthony, thank you very much. So what are your thoughts on trading apps like HISA and AIBXY Digital Trader? So one of the key areas that the regulator has emphasized on is the ability to be able to transact, buy and sell the shares. So number one is, I say that do your due diligence first, ensure that the platform has been approved by the regulator. I do support the platforms 100%. They create an environment where you can be able to trade the shares that you hold regardless of the units. We have predominantly had a market where it's only huge quantities will trade, and by quantity I say probably mkulima mudogo hangeuza shares haraka haraka. But with the new platforms, we are able to trade, we are able to also participate in gaining. Remember, the gain in a shilling goes a long way. A million has several shillings. 1,000 has several shillings. A shilling will always be the unit that gives you the gain. So ensure you do the due diligence by checking whether the app which you are using has been approved by the regulator. So thank you very much. Anthony also says, what is the minimum someone can invest kwa NSC? So Bwana Anthony, minimum ya kuinvest NSC ina depend na kenye unanunua. So kwa NSC ukienda kununua REIT na REIT iko na bei fulani, hiyo ndio minimum. If you want to buy a share and the share price, if I can give an example, one share is trading for 500 shillings, that will be your minimum entry point compared probably to another share where it will trade at 25. So with 500, you have several shares you can buy in one entity, or you can buy one share which is priced at 500. So again, the entry point is based on what you are buying and the platform which you are participating in. So thank you. We have another comment from Sally. Salim, you are reaching out to us from Facebook. Nice to have you, and karibu sana. We appreciate you. What is the best balance of fixed income and shares should you have with a balanced fund? Wow. Now that becomes a very strategic approach. So we normally have what we call bull and bear runs. So a bull run is when the prices of shares in any stock exchange are going up. And a bear run is when the prices are dropping, generally market-wide, and we normally have this. That is what we refer to as volatility. So when prices are going up, you find that the strategy is more inclined on buying. You buy when the bull run starts, and start selling when you have actualized a return. And I give it an example this way. One of the key professional management or professional managers use is they will have a model, and they will say that we are hoping to at least get a return, say, of 35%. So when we get to a threshold of 35%, we will sell off 10% of that stock. If it goes again up to 40%, we will sell off, say, 20%. So in doing this, they might be disposing. Then when you're having what we call a bear run, they will say if the prices of a certain share falls down, let's say 15%, we'll acquire a certain number of shares. Why? Because there's probably potential for that share gaining back the 15%. Now, if that share, say, drops down 50%, and they still have confidence that the fundamentals of the shares are okay, they will say that it is time for us to acquire even more shares, buying into more. So the balance is something which is determined by the strategy and what you intend. So there is sometimes where you find that for the balanced fund, equities might have a little bit more allocation, and sometimes you lower the equity exposure such that you are able to mitigate any events, any losses or that may come from volatility of equities, and also take advantage and lock in gains when we have the capital appreciation. So hopefully I have answered you very well, Sally, and thank you again for interacting with us. Please share with your friends, and they can join us next time or for this session. We have in Zoom Mr. Mutahi. Thank you for joining us. How can a beginner get into investing in equity funds? So Bwana Mutahi, the first key thing is to identify which funds you want to enter and the terms and conditions. Normally joining is a very easy process, could be through an application, could be through an app. You can look at what they hold, the returns they give, but mainly all has to do with, have you met the minimum requirements for entry, and are you comfortable with the terms of that fund. So are you comfortable with the minimum investment period? If there is any conditions on exit, please ensure that you're comfortable with them, and also ensure that you are, what we call your risk appetite and tolerance, aligned with the fund. Thank you sana Bwana Mutahi. And so as we end, as we get to close our session, I'll take a bit more comments and questions. This has been very wonderful and exciting for me just to learn from you. Nimeongea kizungu mingi sana leo, lakini nashukuru some of the terminologies hizi za economics hazitokangi na Kiswahili vizuri. So YouTube pale tuko na Bwana Masaku. Asante sana Bwana Masaku kukuwa nasi leo. We hope to see you more oftenly. Suppose I'm ready to start investing, that is, I have the money. What is the starting point? So, Bwana Masaku, starting point, pahali mimi personally naweza kuambia tuanzie, would be tufanye assessment, tujue pahali risk yako iko, then tukae chini tuangalie between hizi fixed income mpaka special funds, pahali you fit. But the one which you can dive in directly because you already have the money saved ni fixed income, because it will give you a consistent return, and which is a return which is even a bit higher than the market. So start with fixed income, do the assessment, do the research, get to understand the other moderate to high risk funds, and then you can diversify. So thank you very much. Another comment from YouTube, Bwana Victor Karanja. Karibu sana Bwana Victor. We are very humbled to be here and for the interaction. So where do I start, and what are the requirements to start investing in money market or treasury bonds? Secondly, what's the difference between treasury bills and treasury bonds? So thank you. So where do you start when you want to invest in money market? We have made that journey very easy for you. If you have the Co-bank app or the AIR app, we have an investment tab. It will take you approximately less than 5 seconds for you to join the fund and to deposit the money and be able to start investing. So you can start investing in the money market or in the fixed income fund. So for treasury bonds, we can sit down and see what are your requirements. So for treasury bonds, kuna different types of treasury bonds, plus they are for different time periods. So you have treasury bonds which are maturing in 1 year, 2 years, 15 years, 20 years. So we can also have a discussion on that one, and we are able to assist you when it comes to purchase of the treasury bonds. Now, what's the difference between treasury bills and treasury bonds? So treasury bills ni loan to the government which is for less than 1 year. So anapatiananga 91 day T-bill, hiyo ni kama fixed deposit ya miezi 3, 182, that is 6 months, and 1 year 364. So T-bills do up to 364 days. Treasury bonds do more than 1 year. Now that is the main difference, and then treasury bonds will pay interest every 6 months. Treasury bills, what they do is they discount. So if you are buying a treasury bill for 100,000 with an interest of 10%, what you do, simple calculation, is that you will give the government 900,000, I mean 90,000, and they will return to you back 100. So it is what we call the principle of discounting. So thank you very much. I can see that our time probably is coming to an end. Let me answer one more question from YouTube. So we have Brigadier Karibu sana. Thank you very much for joining us. Guide us on how to join the fixed equities for a person who is out of the country, and would give a seamless interactive platform. Thank you. So basically, geographical locations nowadays are not a hindrance when it comes to investments. What we do is that we share joining forms. We do share the joining forms for you to fill. You provide us with KYC. We will we'll give you all the details on how you need to transfer the funds. The good thing is that Cooperative Bank has even platform that support people in diaspora, and you will be able to trade like as you ni kama uko nyumbani. So you can be able to transfer your funds in between the funds. You can be able to invest just like you are with us here. So I'll request my team to reach out to you, see how we can be able to assist you with that. So allow me to come to the end of today's presentation. It has been wonderful. It has been good. Please follow us on our Facebook, Instagram, and YouTube. You can email us at webinar@cobank.co.ke. We'll be glad to respond to you. Thank you. Hopefully to see you another time. Asanteni.
Thank you for joining us on this week's webinar. Do you have what it takes to be an entrepreneur? Join us next week as we break down how you can generate a winning business idea, from spotting opportunities to turning passion into profit. To join the conversation, send us an email at webinar@cobank.co.ke and we'll give you the plug. Remember, by sending us your email, you consent to receiving future communication from us. Let's go, let's grow.